Big news just dropped. Fidelity has received the green light for its spot Bitcoin ETF, and that's sending waves through the market. Coinbase shares surged by 4% this morning, reflecting the growing excitement around this approval. But that's not all, there's more on the horizon. The SEC is also hinting at a review of Ethereum staking ETFs coming up in Q3. This is a pivotal moment for crypto investors, and you'll want to pay attention. Trading for Fidelity's Bitcoin ETF kicks off next Monday with an impressive $50 million seed. So, stick around as we dive deeper into what this means for you, the investor, and why this could change the game in ways you might not expect. This morning, Fidelity received the green light for its spot Bitcoin ETF, a significant milestone that could reshape the landscape for cryptocurrency investments. The news has already sent Coinbase shares up by 4%, showcasing the immediate impact of regulatory movements on the market. With trading set to kick off next Monday, Fidelity is starting with a hefty $50 million seed fund, signaling serious confidence in this venture. The SEC's shift toward embracing Bitcoin ETFs could also pave the way for Ethereum's staking ETFs, which are under consideration in their upcoming Q3 review. This could mean more institutional players entering the crypto space, which is crucial for fostering a stable market and attracting more serious investors. For retail investors in states like California and Texas, this development is particularly important. In California, a tech-heavy population is always on the lookout for innovative investment opportunities, and this ETF could attract those interested in diversifying their portfolios beyond traditional assets. Meanwhile, in Texas, where crypto mining has gained significant traction, the approval of a Bitcoin ETF could lead to increased local interest and participation in the crypto market. Fidelity is not alone in this race. Firms like BlackRock are also keen on tapping into the growing demand for Bitcoin exposure. The potential for these ETFs could stabilize prices and reduce the wild fluctuations that have characterized crypto trading for years. As we prepare for this exciting launch, it's essential to consider how these developments will influence the overall market and the opportunities they create for investors across the United States. With a Bitcoin ETF now on the table, many investors will likely reconsider their strategies and perhaps even their crypto wallets. Regulatory clarity brings a sense of security that can attract more hesitant investors who may have been sitting on the sidelines. As the Federal Reserve continues to monitor these developments, it's clear that the integration of Bitcoin into traditional finance is gaining momentum. Large investors, or whales, are closely watching these changes, having the potential to significantly impact market dynamics. This approval could also set a precedent for altcoins and other cryptocurrencies, expanding the ETF landscape further in the future. As we analyze the charts leading up to this trading launch, it's clear that the sentiment is shifting. Investors will be looking for signs of increased volume and bullish trends as the market adjusts to this new reality. The approval of a Bitcoin ETF is more than just a number. It's a catalyst for change that could redefine how we think about cryptocurrencies in the financial world. As Fidelity and other major firms lead the charge, this moment marks a turning point in the relationship between traditional finance and the world of digital assets. Keep your eyes peeled, as this could be just the beginning of a transformative era for crypto investors. As the news spreads about Fidelity's approval for its spot Bitcoin ETF, retail investors are undoubtedly feeling the excitement. Imagine this scenario. You're a retail investor in California, sitting on the sidelines, wondering whether to dive into Bitcoin. You decide to take the leap and invest $1,000 in Fidelity's new ETF when trading begins next Monday. With an expense ratio of just 0.75%, your annual fees will be about $7.50. If Bitcoin surges by even 10% in the first week, your investment would grow to $1,100. That's a gain of $100. Not too shabby for a week's work. Now, let's switch gears and consider a retail investor in Florida. You've been using Coinbase and decide to get in on the action as well. You invest the same $1,000 directly into Bitcoin on Coinbase. But here's the catch. They charge a 0.60% trading fee on transactions. So, upon purchasing, you'll pay $6 in fees, leaving you with $994 invested. If Bitcoin's price mirrors the 10% increase, you'd be looking at a value of $1,093.40. That's a gain of $99.40, but with the fees on Coinbase, you would have made slightly less than your California counterpart. It's a subtle reminder that platform fees can chip away at your profits. What's fascinating is how this ETF approval is shifting the landscape for retail traders. Fidelity's ETF offers a more traditional and potentially less costly avenue for investing in Bitcoin. It's like having a guided tour versus navigating a maze. One of the biggest benefits for investors is the growing alignment between traditional finance and digital assets. As the Federal Reserve continues to adjust monetary policy, the appeal of Bitcoin might rise, especially as inflation concerns linger. Now, let's talk about the implications for the average investor. Fidelity's ETF could attract a lot of institutional money, which might lead to more stability in Bitcoin's price. For our California investor, that could mean that your investment grows not just through market gains but also through increased adoption and confidence in Bitcoin. Meanwhile, don't forget about Ethereum. The SEC's openness to ETH staking ETFs could open another door for retail investors. Imagine now that you decide to invest in an Ethereum staking ETF once it's approved. If you stake $1,000 worth of Ethereum, you might see annual yields of around 5%. If Ethereum also sees a 10% price increase, your total value after 1 week could be $1,100, plus a little interest for staking. That's the beauty of these financial products. They create multiple avenues for profit. The flow of money into these ETFs can generate significant momentum. Retail investors will be watching to see how these products perform, and if Fidelity's ETF continues to attract interest, it could drive more investors to the market, leading to even larger price increases. As institutional interest grows, we might see the whales, those big players in the market, become more active. Their movements can influence the market, and as more retail investors come in, the dynamics change. Lastly, it's crucial to remember that with new investment products come new security considerations. Fidelity is a well-established name in finance, which means that retail investors might feel more secure investing through an ETF than directly buying Bitcoin on an exchange. The bottom line is, while both investing in the ETF and directly buying Bitcoin come with their own risks and rewards, the introduction of this ETF could be a watershed moment for retail investors. As trading begins next Monday, we'll see how these opportunities unfold. Will the excitement translate to significant price movements? Only time will tell, but it's certainly a thrilling moment for anyone involved in the crypto space. So, don't forget to keep an eye on your trading screens, because this week could bring some unexpected surprises. Stay informed, stay engaged, and make the most of this evolving landscape as the lines between traditional finance and cryptocurrencies continue to blur. Big news in the crypto world this morning. Fidelity has officially received approval for its spot Bitcoin ETF. This could be a game changer for investors looking to dip their toes into Bitcoin without directly purchasing the asset itself. But here's the part nobody is telling you. While Fidelity's ETF might be grabbing headlines, there are other options out there worth considering. Let's break down 3 alternative approaches to investing in Bitcoin via US-compliant platforms. First up, we have Coinbase. This platform is one of the most popular for buying and selling Bitcoin directly, with competitive trading fees averaging around 0.5% and no minimum investment required. It's accessible for many retail investors. Plus, Coinbase offers a user-friendly interface that makes navigating the world of crypto straightforward for beginners. Next on our list is Kraken. Known for its robust security features, Kraken charges between 0% and 0.26% per trade based on your 30-day trading volume. You can start trading with just $10, making it another great option for those just starting out. They also offer a variety of cryptocurrencies, giving you the flexibility to diversify your investments beyond just Bitcoin. Now, let's not forget about the upcoming options for Bitcoin ETFs. If you're looking for a more traditional investment route, you might consider Grayscale. They offer a Bitcoin trust, which has a minimum investment of $50,000 and carries a management fee of 2%. It's a bit of a higher entry point, but it also allows you to invest in Bitcoin indirectly while being traded like a stock. It's important to consider the trade-offs here. While Fidelity's ETF offers a more straightforward way to invest without the need to manage a wallet, platforms like Coinbase and Kraken provide the ability to buy and hold actual Bitcoin. This could be crucial during price pumps when owning the asset directly could yield higher returns. On the institutional side, platforms like BlackRock iShares and VanEck are also eyeing the Bitcoin ETF space. While they haven't launched anything yet, their impending entry could mean more options for both retail and institutional investors in the near future. Keep an eye on these developments if you're looking for a long-term investment strategy. On the flip side, it's essential to remain cautious. The crypto market can be volatile, and while ETFs might offer a way to invest without the complexities of wallets and exchanges, the risk of market crashes still looms large. This is something to consider, especially as we see more traditional investors entering the space. For retail traders who want to diversify, eToro offers a unique feature called copy trading. You can invest alongside top traders and benefit from their strategies. The platform has no minimum deposit for a standard account, but you may face spreads that can vary significantly based on market conditions. If you're interested in a more hands-on approach, platforms like Gemini also support staking, which allows you to earn rewards on your Bitcoin holdings. However, they do require a minimum investment of $0, with fees that can go up to 1.49% per transaction. Security is another crucial factor to consider when choosing a platform. Coinbase has robust security measures, but Kraken is known for its world-class security reputation, making it a favorite among more cautious investors. Always check how your chosen platform protects your assets and personal information. We're also seeing signals from the SEC about the potential for ethereum staking ETFs and upcoming reviews. This could open the door for other cryptocurrencies to gain similar recognition, but it's still a waiting game as we monitor regulatory developments. Remember, if you choose to invest directly in Bitcoin, you'll need to consider how to store it securely. Crypto wallets can range from hardware options, which can be more secure but slightly cumbersome, to software wallets, which are user-friendly but might expose you to higher risks. In summary, whether you opt for Fidelity's ETF, direct investments through Coinbase or Kraken, or explore trusts like Grayscale, there's a plethora of options to fit different investment styles and risk appetites. As this landscape continues to shift, make sure to keep your finger on the pulse of the market and stay informed about regulatory changes. The potential for growth in this space is enormous, but so is the need for diligent research. So, as we gear up for trading next Monday with a hefty $50 million seed for Fidelity's ETF, make sure you're equipped with all the right tools and knowledge to navigate this exciting new chapter in crypto investing. If you're looking to jump into the action surrounding Fidelity's newly approved Bitcoin ETF, here's what you can do this week to position yourself wisely. First, start by setting aside a dedicated investment budget. Think about how much you're comfortable investing, perhaps around $500 to $1,000. This amount allows you to participate without overextending your finances. Next, ensure you have a secure crypto wallet in place. If you're planning on holding any Bitcoin or ETF shares, a hardware wallet like the Ledger Nano X is a great option. It's crucial for safeguarding your assets against potential hacks or vulnerabilities. After that, make sure you're signed up on a reputable exchange, like Coinbase or Kraken, where the ETF shares will be available. If you don't have an account yet, take a few minutes to register and complete the verification process. Being prepared will allow you to act quickly once trading begins. Then, pay attention to the market news this week, especially regarding any updates on the SEC's stance on Ethereum staking ETFs. You'll want to stay informed, as any positive developments could influence the broader market and your investment decisions. Consider joining a community of retail traders, whether it's on platforms like Discord or Reddit. Engaging in discussions can provide valuable insights and diverse perspectives that may help you strategize effectively. Lastly, familiarize yourself with charting tools that will help you monitor price movements. Platforms like TradingView offer a range of technical analysis tools, which can help you make informed decisions as the market fluctuates. By taking these steps this week, you'll position yourself to capitalize on the excitement surrounding Fidelity's Bitcoin ETF approval. Stay proactive, and remember that informed investing is key to navigating this dynamic landscape. As we look ahead to the next 90 days, the excitement around Fidelity's Bitcoin ETF could reshape the investment landscape, paving the way for new possibilities. How will this shift impact your strategy, especially with the potential for ETH staking ETFs on the horizon? It's an intriguing time to be involved, as many investors are eager to see how these developments will drive momentum in the market. Remember, the moves made by institutional players can significantly influence the direction of prices. So, how are you planning to navigate these changes? Leave your thoughts in the comments below, and don't forget to subscribe to the channel for daily crypto updates, so you can stay informed.